Hello and welcome to the paid weekly recap for the week ending April 2nd, 2026. I'm Keith Harwood, CIO of Yellow Tunnel, and also pictures Vlad Karpel, the CEO and founder of Yellow Tunnel and the creator of the artificial intelligence behind the paid system. Normal disclosures before we get started. Options involve substantial risk and are not suitable for all investors. Yellow Tunnel and myself are not investment advisors and not registered with the SEC nor FINRA. The information in this presentation is for education and information purposes only and should not be considered trading advice. And finally, myself and/or the team at Yellow Tunnel may have a financial interest in the securities presented in the trade ideas. I also urge you to read the characteristics and risks of standardized options available at the link highlighted here. If you need more time with the disclosures, please go ahead and pause the video now. Otherwise, we'll get into the recap for this past week and a little look ahead into next week. So for this week, we had the 10-year yield fall. Somewhat significantly, after looking like it was going to break out and continue higher, we had a pullback on Monday that held 4.3% throughout the week. Looked like it was going to spike up on Thursday or with our holiday shortened week. But then we started to see things calm back down. It's continued concerns over what's going on with the Middle East, the conflict. Will we get to a resolution? Will we get to an accord, or will it escalate? Now, the news over the weekend is effectively we have a deadline. Tuesday night, if the Strait of Hormuz is not open, it's going to escalate. At least that's the threat. We will see how things go. But we now know that particularly Monday and Tuesday, I expect some uncertainty in the market, barring an opening of the Strait of Hormuz on Monday during market order hours or Tuesday before the market closes. Now, the market seems to be stuck in a mode of pricing in the expectation that at some point this is all going to work out. And at that point, the market can go back to a rally. If I think back to a year ago with Chinese tariffs, that tariff war really took a toll on the market. And yet, once it was resolved, it only took a matter of weeks or a couple of months to get back to new all-time highs. So if I'm sitting here on the sidelines looking at this market, I'd say, yeah, no, we should be falling because we have an active war situation. And yet, also understanding that if it all gets resolved in the next week or two, we may be pushing new all-time highs come May 1st, maybe June 1st. So from a long-term perspective, I don't want to sell. But from a trader's perspective, we may be seeing people hit stops. So people reduce their risk and then recognize that, in the long run, I think all this stuff will probably work out and go higher. What changes that is if it's not looking like that's going to actually get resolved quickly, this becomes an extended conflict, war, etc., that has a more significant impact on the global economy. Time will tell if that will occur. And I think Tuesday night will be a crucial inflection point for everything going on. Now, to start this week, it looks like the market's going to be starting weaker, but we may see that bounce back just like we saw on Thursday. We'll see how it goes. NASDAQ looks very similar. Of course, we're below all the key moving averages, got back above the 10-day moving average, but below the 200, below the 100, below everything longer term. Again, there seems to be some short-term lack of sellers willing to push this market lower under the expectation that we may be looking at a resolution in the near term. And the same can be said for small caps, other than the overall weakness. We only had one day closing below the 200-day moving average, and that was Monday, and we quickly bounced back. Stuck between the 200 and the 100-day moving average. We have basically a channel or a rectangle type look here to this market. Ultimately, we may resolve higher, we may resolve lower. Again, Monday and Tuesday, I think we'll be telling with Tuesday evening's deadline fast approaching and being a big point. So we may see light volume on Monday. European markets are closed. We may see light volume continue into Tuesday due to uncertainty, and then we may see some volatility this week. And speaking of volatility, the VIX is settling in around 24 for the week. Looked like it was going to spike. We pressed up towards 30 and then fell off. So implied volatility is pricing in this expectation that there's not a lot of fear. There's a little bit more greed in this market. Now, yes, the true low point for volatility is around 15 or 14, 10 points lower than it is right now. And the high point is about 10 to 15 points higher than it is right now. But if the market goes into liquidation mode, we could certainly see the VIX in the 40s or even the 50s. So something to watch for here. We could see a higher and higher VIX. I think it's justified here. I think it would be justified to be higher. But given that every time we sell off, there are put sellers out there willing to take off their hedges, and then we rally and there are put buyers that return, we've just got a choppy VIX range right now. Now, for this week, we held that KMI position, entered on the last Thursday. Friday, we were able to exit half on that spike up before it started to fade. And really, Friday was an interesting day. I thought Thursday was an interesting day. It looked like this market was ready to recover, that oil companies, oil stocks were willing to recover with oil prices really running higher. But then throughout the day, the market recovered, but oil companies tended to be weak. So there's a rotation out of this expectation of a long-term problem with the oil price point, even though the short-term prices are exceedingly high right now and going higher over the weekend. With that trade, the stock was down about 3% for the week. We had some theta because we're getting close to expiration with the April 17th calls. We also saw implied volatility fall somewhat significantly in these oil companies as we moved away from the highs. So between the drop in the flat price and the drop in the implied volatility and the theta decay, the second half of the position took about a 71% loss over the 7 days. So net, a small loss, the 50% win with a 71% loss. The average of those two is about a 10% loss on this trade. We'll be looking to see if the next trades that come from the signals likely to be later in the week, assuming maybe we get a resolution or some sort of concrete move forward with Iran can be a bit more momentum to that upside because right now we're still chopping, 1 day up, the next day down, or 2 days up and then 3 days down, and then back and forth. And that seesaw effect can be a bit tough for the longer term holds. When we get momentum, it could take off with a lot of sectors, particularly if tech starts to get moving forward. Overall, the trading room continues to be strong. Please do join us this week. Morning bells from 9:15 till 10:15 Eastern. Closing bells from 3 to 4 Eastern. Vlad and I will be on to talk through market conditions and let you know how we're feeling about these markets. And I think, Monday, Tuesday, Wednesday, Thursday, great time to potentially have somebody to ask some questions of as you wish. And if you have questions that come up throughout the week, you can always feel free to reach out to us. I'm Keith at yellowtunnel.com. Vlad is Vlad at yellowtunnel.com. We're happy to answer any questions you may have. So we'll see how things go this week with Iran and see how the market reacts. So happy trading to all, and we'll look for continued opportunities with the AI signals. Thanks again.